terms in the society are the taxes. Well, let's see what the taxes are in India. Taxes are imposed by the governments on citizens to make income for maintaining projects in order to boost the economy of the country and to raise the standard of living of its citizens. The authority of the government to levy taxes in India is derived from the Constitution of India, which allocates the power to levy taxes to the central and state governments. All taxes levied within India need to be backed by an associated law passed by the parliament or the state legislature. Tax payment is beneficial on various stages, including the development of the nation, remodel infrastructure, the upliftment of the standard of society, and utmost for welfare activities as it is a welfare state. First is the direct tax. Direct tax is tax that are to be paid straightforward to the government by the individual or legal entity. Direct taxes are governed by the Central Board of Direct Taxes, that is the CBDT. Direct taxes are not transferable to any other individual or legal entity. Subdivision of direct taxes. The following are the subcategories of the direct taxes. First is the income tax. This is the tax that is levied on the annual income or the profits, which is directly paid to the government. Everyone who earns any kind of income is liable to pay income tax. For individuals who are below 60 years of age, the tax exemption limit is 2.5 lakh per annum. For individuals between the age of 60 and 80, the tax exemption limit is 5 lakh rupees. There are different tax slabs for different income amounts. Second is the capital gains. Capital gains tax is laid on the sale of a property or money received through an investment. It could be from either short-term or long-term capital gain from an investment. Third is the securities transaction tax. It is levied on stock market and securities trading. The tax is levied on the price of the share as well as securities traded on the Indian Stock Exchange. Fourth is the prerequisite tax. These are taxes that are levied on different benefits and perks that are provided by a company to its employees. Fifth one is the corporate tax. The income tax paid by income is defined as the corporate tax. It is based on different slabs that the revenue falls under. The subcategories of corporate taxes are dividend distribution tax, fringe benefit tax, minimum alternative tax. Now, after having a look at the subcategories of the direct taxes, we come to the indirect tax. Indirect tax are imposed on services and products, and these are called indirect tax because they are collected by the seller of the service of the product. The tax is added to the price of the products and services. There is only one indirect tax levied by the government currently, and this is called the GST or the Goods and Services Tax. GST is a consumption tax that is levied on the supply of the services and goods in India. There are other taxes apart from the direct and indirect taxes, and these are minor revenue generators and are small cess taxes. The various subcategories of other taxes are as follows: property tax, professional tax, entertainment tax, registration fees, stamp duty, transfer tax, education cess, entry tax, road tax, and toll tax. Now let us have a look at the benefits of the taxes. Well, the purpose of taxes is to provide the government with funds for spending without inflation. Taxes are used by the government for a variety of purposes. Some of them are funding of public infrastructure, development and welfare projects, defense expenditure, scientific research, salaries of state and government employees, operation of the government, public transportation, pension schemes, law enforcement, public health, public education, and they spend the money in public utilities such as water, energy, and waste management system. People very often are seen complaining of a high rate of tax or enormous tax by the government, but they forget that paying the taxes due on time gives them some advantages, which are loan approvals, visa applications, self-employed individuals, government tenders, carrying forward of losses, and claiming tax returns. Penalty that is imposed for not paying taxes could be the government can impose penalties on varying degrees on any individual or legal entity who evades taxes. The penalty is dependent on the category of the tax that has not been paid. This means that the amount that is owed as taxes should be paid, and in addition to that, the fine as well as its interest is to be paid as the penalty. Well, in India, we do not have a credit score system, but your PAN card acts as a credit score. Once you get the number of your PAN card, they can very easily find out as to what defaults have you made if you've taken any loan. Hope that this might have cleared the doubts in your mind about the taxes. And yes, don't forget to subscribe to the channel for future learnings. Thank you.